Hi and welcome to the market alert for Tuesday the 16th of May 2023. So banks and bond yields jump on Goolsby against Biden, Bostic and bad data. A massive short squeeze for yesterday. As it says here, stocks rise with regional banks while dollar dips on weak survey data. So there was a big turnaround yesterday in the price of the regional banks, hence the squeeze to the upside. However, can we please move? Everybody believes in the range these days. Yes, the markets are range bound. It is May. Normally the mantra is sell in May, go away, and the market drops. But on this occasion, it's not. It's one of those that's going against the sort of saying that has been around since the markets have. But nonetheless, the markets are range bound. I suppose that's the next thing, sideways as opposed to making any direction in either the up or down side. That's what you're going to get this May so far. Economic news for today. What have we got? UK claimant change count, unemployment numbers, average earnings as well. I've also got those. Then we go over to Germany for the ZEW economic sentiment, and US then for core retail sales, and then 3 p.m. Lagarde is going to be speaking. So that's your news for today. So 7 a.m. and then 10 a.m. and 1:30 really are the ones, and then depends what Lagarde says at 3 p.m. Okay, let's move on and kick off with the stock markets and have a look at the Dow. So in the Dow yesterday, we see prices moving to the upside. They were stopped by the 50 fib and also the 50 EMA, with the market down on the overnight, currently just sitting above the 50 EMA. So a bit of weakness around there. So yesterday morning, the market continued to move to the upside, traded up to the 200 MA and the R1, and then came back and did an 89% retracement. Where to? Right to, as you can see here, from here to here, trading up to 89, which you'll see there. So trading to 89 and then selling off. We see the buying coming back in at 3 p.m. and then prices getting back above the DP. Have a bit of a retest here down to the close and then back up to the BRN. But if you have a look here, you will see that the market from here down to here traded again between 78 and 89 before trading sideways. And again, we've got more retracements from here to here, and then we'll go from there back to there to bring us down to where we're currently trading. So overnight, the market below some critical points here: the close, the DP, the 50 EMA, the 20 bar moving average, the BRN as well. So we're in a bit of a no man's land at the moment. But are we? So if we go from here to here, you will see that we're currently trading at 78% retracement, which is why you've got a bit of demand there. So we're close below this, we'll retest this, and then you can head down towards the S1 and the low. And that being the case, from here to here, you will see that your 89 is going to tie in with the S1 and down there with the low as well. So a very important area down here should the market break this area. Let me just remove these, and then on the upside, if we kick off marching to the upside from this morning, you'll see there back to this sort of high is where you're going to get some resistance. German DAX, yesterday the market trading up to 89% retracement. We drew this in yesterday morning. Market, same as the Dow overnight, sideways to lower, just staying above the 5 bar moving average. Let's just mark up some downside targets just in case there is further weakness today. These would be the downside targets. The upside is to get through this 89 that we see here. But at the moment, a bit of weakness around at we've got the 5 and the 20 MA there as well, which tie in with the 38 and the 50. 30 minutes, this is the top of your 89 in the daily that we saw yesterday morning. Market open, traded up. Market came back 50%, then down. You see a cluster there during the sell-off. You see them buying back in. You've got this huge demand. We're oversold. And then you see the buying coming back in as we move the market back up to 89% there. We then retraced to the close and the 50 EMA and back up 78%. You've got the BRN and the R1 above, and then we've moved back down there as well. At the moment, we're finding support at the 200 MA. Very important that we hold at this level, and then from here to here you'll see this is also the golden ratio at the moment as well. Any move to the upside will be from this high down to this current low. They will be the targets on the upside, which requires the 50% retracement at 62 to get through the DP and the close. But also you've got the 50 EMA there as well before the 38 and the 20 tying in again with that 38 as well. In the 5-minute chart for yesterday, this having a look inside the 30-minute, this was what happened around the 89% retracement. Market came down to the close of Friday, then came back up and then decided to trade sideways. Did break it here, but you can see there was absolutely nothing happening yesterday morning. Barely worth trading, to be honest with you. It became incredibly boring. Market sideways again, and then we sold off just before lunch. And then when the Dow kicked in, you can see that we retraced several times and then made our way back to the upside. In the S&P, very much sideways. As it said in the headlines, the market is really sideways at the moment. Not a lot to report in that one. Again, if you look at it in more detail, we traded up, we had our retracement, we came back down. We see the shakeout and the buying coming in, market up, retracement back up, and then overnight we're currently just about holding above the DP. Well, at the moment, it's just dropped below it. So the market struggling here. In the FTSE 100 over in the UK, we've got the market moving higher yesterday. I think that looks about an 89% retracement. Yeah, bang on it. So yesterday the market trading up to 89, stopping and making its way back down on the overnight at the moment. Let's just have a look where we are. 38 tying in with the 5 and the 50 EMA there, so we could find a bit of support there. And in the 30-minute chart, choppy one, but trading up with the US and the DAX yesterday, finding support at the high and then moving off this for 100% retracement. Weakness then came in down to the 50 EMA and just above the close of Friday. You can see the huge buying coming in there as we move the market back 89%, then another 89, and then moving it lower overnight where it's continuing to be red and also taking out the DP now. So the question is, how much lower will it go? Well, there's your downside targets. There's your 89, which is always going to be just above the low to the left where you measure from. So there's a potential support there, but failing to do that, then we go down to the 200 MA, the BRN, which ties in with the 7750 psychological level, and then the low at 7743. In the currencies, GBP JPY up yesterday, trading up to 78% retracement, but failing to hold. Down on the overnight, again range bound. You can see there the market moving up again with small pullbacks on these occasions down to the 20 bar moving average, 200 in this case, and the BRN, and then moving higher. We're above the DP at the moment, and we're not getting above the close though, so we've got a bit of resistance here again as the market trades in that sideways range. In the pound yesterday, this moving back up as the dollar moved lower, trading up to 38% retracement, but a bit of weakness there at the moment on the overnight. Here's the move yesterday. You see there, big move to the upside as we saw, well, just under 100 points. But overnight, again, just stuck in the sideways range. Need to take out the previous day's high, the dollar to continue to move lower, for the pound to continue to move back to the upside to trade through any of these fib retracements here. And in the dollar index, you can see that we were down yesterday, a bit of weakness overnight as well for this market. So again, that 100.83 and a half is still there, We did get close to it, but as you can see, what happens is we got to 89% retracement. We started to move back to the upside there. Finally, in the metals, silver managing to move higher yesterday, but more weakness overnight. I don't think the downside's over yet, despite there being a shortage of physical silver. There are still banks that are short, and they're the ones that are dominating the landscape with regard to this. All it is, it just makes it cheaper to buy. I mean, the thing is a laughing stock, frankly. Like I say, there is absolutely no other metal in the world, no other product in the world that is half the price, or more than half the price, or less than half the price, I should say, than silver from 1979 into 2011. It's beyond a joke, but it is what it is. So yesterday you see the ups and downs of the markets, but overnight again it's being pushed lower. Expect the low to be tested today from yesterday. I wouldn't be at all surprised, or at least an 89% retracement of that level. But if you get down to this level, you might as well retest the low, which is probably likely to be done. In the daily chart for gold, we're starting to move up a bit. We're still finding a bit of support at that 60. We came back down, more or less did 100% retracement from here to here. We are oversold, so wants to move up as far as the technicals are concerned. Whether it's allowed to is another matter. There is still record-breaking purchases of gold by the central banks, particularly China and Singapore. So again, it's in their favour and in their interests to make sure that the markets are crushed using the paper market. There should not be a futures market for setting the price of gold and silver. There really shouldn't, but there is, and that's how they manage to suppress the prices. And if you don't think it's going on, then just do a search for silver manipulation and JP Morgan fines of $900 million plus, and that's just one of them. They just go on. And also traders that have been sent to prison for manipulating the price of silver. Anyway, this is the 30-minute chart of gold. Coming back to the DP and then back up to the high. Very choppy yesterday, like I say, but looking a lot stronger than silver, as can be seen by the gold-silver ratio. So let's have a quick look at that before we finish. So the gold-silver ratio, as you see, this is just ticked up again. Silver is being hammered compared to gold at the moment. Gold a lot more steady, silver a lot weaker. And like I say, you can expect this to go back up to these levels. They're not done with this yet. It's been going on for years. And if you can get into an inflationary phase where we are now, and they can still do it, well, it makes you wonder whenever they'll actually stop doing it. It's just amazing. But it is what it is, like I say. So we just have to be patient and wait until this nonsense stops. Okay, that's it for this one. If there is anything else to report during the day, anything of a geopolitical nature or whatever, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.